Hey, how's it going, everyone? I hope you guys have all had a very profitable month. If not, definitely check your journals, review your trades, and see what you could have done better to improve your situation in terms of trading through bad price action. Because again, like I said, this month was not the best price action for sure. Very low volatility, a lot of choppy days, but I still came out green. I made about over 100 risk reward this month, like usual, and I have two members in actually the Discord group. MJL, which he joined us like last month. He said he's literally green every single day this month, which is crazy because I'm not gonna lie, it's really rare for me to even get entire month of just straight green days without not a single red day. So I mean, the fact that you're coming out green every day this month is amazing work. And it doesn't mean you're trading every single day, also, right? I don't know how many days these guys are trading. They're in the group, of course. MJL is in the course, just a 100 word course, and Tyler is a private mentorship one-on-one student that's been with me for about a year now. He's been in the group for quite some time for sure. He's definitely had a lot of experience under his belt. But great to hear that Tyler, he said, he took this last trade idea I sent. He said he's locked out all of his accounts, I assume funded accounts, and he said that this is his first ever undefeated month. Now, even like I said, it's very rare for me to have undefeated month. I don't know if he took a trade every single day, but if he did, that's like excellent work, right? And same with MJL, he's also green every single day this month, every day. Awesome work, people. Thank you all for your help. Loving it. And he said he's specifically up. So you traded about 3 weeks, so maybe he might have not traded for a few days, I assume. But even then, that's still really good. The fact you have 100% green days in a single month, nonetheless, means you're able to recognize when to not trade. So there's late days in a month where if you see bad price action, you should not be even taking a trade. Maybe just step away for the entire day, come back tomorrow. There's always tomorrow. If you blow your account in one single day, like a funded account, obviously not a personal, but if you blow a funded account one day, that is completely on you. That's on your fault because you know the market conditions are not in your favor, or you're just tilting, then that's completely also on you as well. Either way, the market's never wrong. You're the one in the wrong if you are ending red. And of course, you can't just always say you're in the wrong. As long as you're executing your system and you know your system is considered profitable over the long run, that's a green day to me. Following your system is considered a green day. That's how you should be viewing your trading. If you're viewing your trading just based on everyday P&L, that is not a good way to basically follow the process, right? But MJL said he's up 115 risk reward, which is amazing in just 3 weeks of trading. So proportionally, that might be even slightly more than me, proportionally. If I have to do math here, probably like 150 risk reward for 4 weeks of trading. And he's only been in the group for a month. So, I mean, it's kind of crazy to hear him say that. I'm not going to lie. He's only been in the group for literally a month and he's already getting crazy results. Tyler, he's been in it for like a year. So this wasn't too surprising to me that he had an undefeated month. But you did say, again, this was his first ever. So that's really good to hear, man. And people are saying, no, red days, but I'm here happy today. Anyway, that's just something I just wanted to share from Discord to help you guys, give you guys some inspiration and motivation to keep going, man. Even when times are rough, you really just need to be putting in smart work, man. It is hard work, but at the same time, you can't be staring at the chart 14 hours a day, grinding through this. You need to be putting in smart quality screen time, not quantity in terms of screen time, to an extent, of course, right? But today's video, I'm giving you guys a trade recap for free here, basically. Going over some trades. Here is an execution proof. I posted this all the time in a free Discord. If you're not in there, definitely join that. This is the execution proof right here for this short here. Since I know some people may not believe, I held through all this unrealized P&L drawdown here. So you can see how price almost came back to where you would break even. My stop loss, I basically kept it right here the whole time. I didn't really move to break even, I believe, on this trade just because of how structure was developing. I saw this as trend line liquidity that got ran, and we continued lower. So I was going to be fine holding this trade with a tiny stop loss right above here in managing this trade and ultimately hit TP. So for those that don't believe me, here is executions literally of that short right here. This was about a 4 risk reward trade, but in terms of P&L, this was about a 5 point something risk reward because I did scale in. Look at the entries, guys. Check the time. Do whatever you want to verify these results, but I'm just showing you guys the proof of me taking these across all my funded accounts. And so you can see I took my initial entry at the IFG entry, and then I scaled in here another 10. So I had 10 contracts here, and I scaled in another 10 contracts here, basically at the OB. When we came back to retrace to the OB because we had that internal change of character here at that point. And I was confident in this trade because we have trend line liquidity right there nearby. We can at least run that. And once we do run that, I could P&L manage if I wanted to, depending on how price delivers. because that's very important. But to me, you can keep it very straightforward, very simple, very mechanical, and just leave your stop loss where it is originally if you wanted to for this trade. I just kept it right above this high here. Why? Well, because I teach you guys how to scale in, and whenever you scale in your position, you don't want to risk -2 risk reward if you lose, right? That's just doubling your risk. And at that point, that's the same thing as doubling your risk every single trade. You might as well just do that instead of scaling in. And so what I tell you guys, this is the scale in method I teach you guys in the course. And that's where you be placing your stop loss. So you still take only a -1 risk reward loss. So if you are wrong. So here's my TP exactly right there, as you can see. And there's my stop loss entry. And you can see later here is a screenshot of me basically exiting the trade right here. So exit 20 contracts at that low as soon as we TP'd. So there's proof there of executions. And now I'm going to go over the trades that were there earlier. Now for this day here, we had news. And you guys know DataWicks are 80% win rate setups that I teach. They're very high probability if you're trading them in the right context. This first one was not entirely a super high probability, but you can still consider this A+. It's just that this one was even more A+, and I'll explain the exact reason specifically mechanically why. We had 830 red folder news. You typically want at least a decently sized data wick. This one is all right. We prefer you want something that's like massive like this, for example. This obviously is not a data wick because I don't think this was a news release here. It's a weird time if it was. Usually news release is 10 a.m. or 8:30 a.m. The 10 a.m. one did not do too much if I remember correctly. Okay, it actually did. It was here, but we don't really have big wicks on either side. But you know, we did have a slight push here, but that is orange folder news, and you guys know red folder news has bigger impact on the market than orange folder news. So here, we just took my data wick setup here, very straightforward. I just took a loss here. This is on the 1 minute. And if I'm checking this chart, I believe I took this on a 30-second. I'll have to check real quick. Because when I sent the screenshots, we did have an OB entry model here. So you guys might have to go back in time and check this, but essentially took an entry here, and we later hit stop loss. Okay, so we later hit stop loss here, and I think it's because market closed. Oh, might have been something to do with market close. Not sure, but anyway, we took a loss here, -1 risk reward. You could have for sure break even here at this internal. In this case, this is internal break of structure. It could be internal chain character, but we didn't make a new high here, so you could have broke even here for sure. I didn't because I follow a mechanical system where I only break even for setups that are not A+. A+ setups, I want to let it run. So this one's is -1 risk reward. No trade here. So if you were just spamming entries, you would take losses here, at least here, and you probably take this win. But point is, I'm not taking these because they're not within my setup. We never mitigated the 1 hour POI right here. Hence, I'm not going to be taking a trade because it doesn't meet my criteria in my backtesting data. So here is the 1 hour POI right here. As you can see, I marked it right there. That's the 1 hour. We never mitigated the 1 hour. And my refinement for the 1 hour POI is right here. Because that 1 hour is slightly big. So you want something a little bit smaller, refine it to the 1 minute there. I didn't really see anything else. This was in line with a POC here as well, if you want to mark that. But like I said, POCs is just another way for us to factually see PYs on different time frames, and you see it worked out perfectly here. So we took a -1 here, and then we have the bottom of the data weight that got swept. And why is this one a higher probability? Well, first off, this one has a PY connected to it. So you see how we have just an origin here. So we have a PY tap plus a sweep of the data wick. On this setup here, we don't have a single PY that got mitigated. If we had a PY here, yes, it would be the same quality setup. But no, we didn't have a PY mitigation here. We just had a huge imbalance actually. So draw liquidity is actually higher here in this case. So this is a low probability data wick setup. And this is not hindsight at all. You really see there's no PY here that's unmitigated. This one has an unmitigated PY. We tapped it and we swept the data wick, and we had an entry here. I just took a fractal stop under setup here because I don't want to miss A+ setups. I missed the original setup entry, which is here. The original setup entry would have been here off the impulse model because you can see not an A+ impulse model, but we do have an impulse move here off this fractal structure here, internal structure here, right before we deliver to the PY. Thus, that is still would be considered a valid impulse model if you want to take that. and we also swept, this low here, but that wasn't something I really was looking at. The main thing I was literally looking at here was we took out the data wick and we mitigated POI. So entered here on the stop hunter setup. My stop loss, you could have placed it here, honestly, for stop hunter, but to be fair, I wanted to be more safe, so I played it safe this time. I had 3 risk reward here. I mean, it's okay. You don't have to cash those 7 risk reward every time when you're trading. And I TP'd basically at the 1 hour origin here. Now, once we came up to the 1 hour, right, you can see we started chopping up in price action. Chopping out fractally. Fractally, we have a lot of internal structure chopping. You want to kind of, when you see this, it means there's a big move that's going to occur in the market. Especially all this just is more manipulation, giving people more chances, big institutions, to enter their shorts or longs, right? This could for sure shoot up. We don't know exactly which direction 100% the big move will be in, but if we are on a higher time frame, man, we are bearish. So if I can close this out here, we are bearish. You can see, and why is my drawn liquidity lower? Well, look, we have these 2 lows here, right, to sweep. First of all, we took out this low here. If we were bullish, we should be making, since we swept this low here, based on my structure system, mechanically, we should be at least doing a mitigation phase up here. At least do a flip, or at least taking out inducement of some sort. But we know we just failed to continue higher, and we actually made a lower low. And because we made that lower low and failed to go higher, it gives me clues and signs that we probably will go lower prior to us going even higher later, because the daily is bullish, right? You need to put these time frames fractally in perspective. The daily is bullish, but it doesn't mean we can't have 1 hour pullbacks to the downside. So for example, if the daily was like this, that's external structure. This is internal structure. Like, can I color it? This would be internal. This would be external. So like, for example, this here can literally be structure on the 1 hour. And all we're doing here is just trading this 1 hour bearish continuation back to some sort of high time frame, one daily demand or liquidity. And you won't always get these setups like this, but when you do notice it, it gives you higher quality chances of anticipating where price is going, because without price anticipation and drawing liquidity, it's going to be a lot harder to have a high win rate. And the reason why is because if you're just spamming entry models, like, think about it, you can just code that into a robot to trade for you. There's no point in manual trading if you're just going to spam entry models everywhere, right? Even at POIs, even if you price mitigate POI and you are entering off entry model, you can code that almost to an indicator, or not an indicator, a robot that trades for you. So there's literally no point in manual trading at that point. And hence why manual trading, we want to include anticipation, because that will give us an edge over the market, which is a higher win rate. And so here we were chopping up here. So I was not confident in taking this IFEG. Yes, I still take these IFGs even if they are smaller, but we were chopping up here, man. This is not clear price action. We want to see something more clear. So I waited a bit more, and we got another IFG set up with an OB entry model. So this here would be considered your internal sweep, because we're within the same POI basically, and we just had a slight little 1 minute manipulation before. And so you can see we had IFG. This one is going to be a higher probability IFG just because it's a bigger IFG, but most importantly, momentum. You see how we had momentum pushing into the POI? If you go to the seconds, this is essentially the same thing as an impulse model on the seconds, if you want to think about it like that. You don't need to see this on the seconds to know it's basically an impulse model on the seconds. You can literally tell based on how the the 1 minute looks, like the candle. Like, this is a massive bullish candle out of nowhere, not delivery where we're chopping up like this. We just have massive push up, and then guess what? We had momentum, very good momentum pushing the other way, giving us higher confidence. This is going to be a valid internal sweep setup here. And so I took that here, and of course, like I said, showing a screenshot, scaled in right here. Look at the screenshot if you want. Again, show you guys real quick. Check the screenshots. I literally have these in the Discord for you guys to see, for them to see my entries, exits. I scaled in on the OB entry model, kept my stop loss there the whole time, and we basically eventually hit my TP, which is here. Now, ideally, my TP would be down here here. Now the reason why I wasn't TPing down there was because one thing, we did sweep previous day low here, and you guys know higher time frame PYs, even if it's counter trend or even if it's like pro trend, it still can make a higher chance of us having a bigger move, meaning there's potential for us to sweep all these highs before making this continuation. So for me, after seeing like all this price action here, and also this is outside the kill zone, we're gonna have lower volatility at some point. In this case, we didn't, but it's not always guaranteed. And we basically hit, TP for 4 risk reward here. And P&L wise, it was about like a 5.2, I think, or something like that. You guys can check the P&L if you want. But yeah, I was just marking out my structure here while I was in a trade. You guys can too, or just do this for your journaling purposes. Mark out your structure and see what's going on here, right? We had a stop under setup here. That's what happened. We made equal lows here. I don't trade equal lows. We just took out this low, or had the same equal price. We had another stop under setup here that you could take advantage of to continue lower. You know what a retail, or not retail, I don't like saying that word since we're all retail traders technically. You know what a new trader would do? What they would do is they would get out of this position here at break even, which is fine. Okay, break even is fine. Maybe they might manually exit before their system even tells them to exit. So if your system is to break even, you should be holding your break even here and not just manually exiting for a tiny profit here. You gotta follow your system and probabilities. And to me, I've seen this happen. That's why, from my experience, I was able to hold this. I've seen this happen, and this looks like manipulation to me, okay? Because my draw was lower, and obviously I was anticipating for sure this is not gonna hold. This PY here is literally basically in premium. If you mark the PY from the top, sure, we did hit 50%, but you guys know I don't like that exact 50% level. I prefer a PY that is slightly deeper, unless we have a ton of liquidity sweeps. Else, I don't like something like this, right? You can see the top of the PY is above the in premium, so not a big fan. I'd rather want something that's like down here, like here, for example. This is a much better PY to take an entry off of. And if you did take this one, it's all good. One of our members took this, and you would just be break even here essentially. Or if you scalped it, this would literally be a TP. So, it all depends on your targets and how you're trading the system, and completely up to you what your system is from your back testing. But to me, my system tells me to hold this, and so I held it, and it eventually paid out here, and it hit TP. So what I was saying was a new trader with no experience would actually close out their short, and guess what? FOMO into a long like this, and they take a meanest stop loss, which in hindsight, this looks goofy, right? But like in live markets, people generally do that. I would rather you close the low in profit here, for example, and not enter this FOMO trade long. I'd rather you do that. I would not rather, if you're just gonna FOMO long here, this is completely wrong way of trading. Completely wrong way of trading. And so we eventually went down lower, had basically inducement here, because this here is a tiny pullback. It meets my inducement criteria. And we just have a big gap here that unfortunately we never hit the POC. I was hoping for price at least to come to the POC. We never did, unfortunately. And you can check NQ if you did have a SMT in terms of NQ mitigating the POC and ES did not. That might have happened. I did not check that. But if you took an entry here, depending on how you trade, if you scalp this, it's just a 2R trade. Otherwise, you break even or you hit stop loss if you think it was an A+ setup. And eventually we dumped. And we did have like news from Financial Juice here, but that didn't really cause a dump. The dump kind of started here already before that news came out on Financial Juice. So wasn't anything important. The main thing is you can see how we accumulated here for such a long time. And like I tell you guys all the time, when we have price chopping around, consolidating, we're going to expect a very big move at some point. We just don't know exactly when. So that's one problem. And then the second problem is direction. If your draw on liquidity is good, you will be able to catch huge moves like this as long as you hold your trade. And then obviously just not like break your rules and such of just trailing stop loss and such. If you are wrong, you just be wrong. You just take a -4, all good. But me personally, obviously, it's worth the risk. Again, like I said, the only reason why I didn't hold was I was in this trade for already an hour. Most of my trades hit TP within 30 minutes or less based on my data. So for me, it's a pretty long trade. I just don't want to be holding this for that long. And another thing is we took out previous day low. So this could, if this held here and we actually continue to off here as a continuation higher, I would just basically lose out on my 5 risk reward, which is a lot for one trade. And I scaled in on this trade too. So definitely don't want to be losing those profits. So I just locked in 5 risk reward. And at that point, I was done, man. There's no other really setup here. Honestly, here, obviously, if you could take a long here off these 2 sweeps on the left side on the higher time frame, if you took those, but I was done trading here. And this basically ended my training session. 5 risk reward plus 3, 8, and -1 is 7 risk reward. So I hope you guys do enjoy this little trade recap. Again, ending the month over 100 risk reward for me personally, and a few other members are literally undefeated for this month. So great to see a lot of people progressing. You have to put in the effort, man, because I can see everyone's progress within the course modules on WAP, and it's pretty clear majority of times to me, like when I see someone's progress, and it's pretty correlated to how much of the course they've watched. Of course, notes matter too, but how much of the course they watched, as well as their own discipline, which is a huge factor as well, for sure. You gotta stick to the system, and also, their P&L, right? People that tend to be very lazy, slack off, that only watch 10% of the course and just go straight to live trading without anything else, no back testing, nothing. There's a lot higher failure rate, obviously, because you didn't learn anything yet, right? You don't even have all the small little details that I mentioned that you're not paying attention to, or you don't even know about. So it's definitely very important. I'd recommend to watch, try to, if you can, watch the entire course. And hopefully that will definitely help out a lot of people, in terms of basically just developing that knowledge for trading and future success. And sorry, something was bugging on my trading view. For some reason, the window wasn't fully maximized. I don't know why, but that shouldn't be an issue here. Anyway, that's it for me doing this trade load recap with these executions proof. And I hope to see you guys in a free Discord if you're watching this on YouTube.